Hello everyone and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Friday the 23rd of April. Now in today's video we're going to see that Forex major pairs are slightly in ranging conditions at the moment. We discussed this in the webinar recently where treasury yields are moving slightly sideways, dollars moving sideways, and we're seeing some ranging factors coming through on major markets. Also, we're seeing that equity markets have fallen off slightly. We had a negative reaction on Wall Street last night from President Biden's capital gains tax plans, and that seems to be affecting into markets today. Now, with regards to data points today, we've had the UK retail sales out this morning, much better than expected, but hasn't really affected on sterling too much. But we're also looking out for the flash PMI data as well. That's going to give us an indication of how the economies are generating through Q2. Now, at the end of the video, don't forget the INFINOX support and resistance table for your levels. Always good to see that, I think. Now, with regards to the charts we're looking out for today, euro dollar is one that we're looking at, and the support of euro dollar at 19.90 is going to be an increasingly important level, I think, there. We're also looking at Aussie yen as well, a chart that I really do like because it shows a good reflection of risk appetite, and we're going to see how that is starting to move sideways. And also finally on FTSE 100, a chart that is threatening a top pattern, threatening a correction, just like some of these equity markets. But let's have a look at how these charts are developing now. And on the INFINOX MT5 platform, we can see here that Eurodollar has broken through this resistance that we saw around 119.90. And that was a key breakout, I think, on a near to medium term basis that has helped to improve the outlook. That move is still holding on to that break as well. It had a bit of a retreat yesterday. The ECB meeting didn't do a great deal. It was a bit of a non-event there yesterday. And it's actually regained some ground, some momentum to the upside today. And you can see here that the RSI holding above that 60 mark now, which is an encouraging sign for the breakout. And if you look on the 4-hour chart, you can see that the 4-hour RSI is still again back above 50, still strong momentum there, looking good, holding on to that breakout, looking a little bit rangy, you would argue, on a 4-hour basis. But if it can break through the resistance at 2070 area, then you could really see some further gains to the upside. But a positive bias definitely on euro dollar there, and if it can get through this resistance, which sort of comes at 2070, 2080, then you're looking towards the 22 figure area. But holding the breakout of 119.90 is the key factor there. Below that, you're looking at 119.40 as your key level. And on to Aussie yen. As I said, this is, I think, a really good depiction of risk appetite. Strong run higher, but now it's starting to range. And I think it is ranging in the fact that it's going sideways. It's starting to see these moving averages roll over. We've got the momentum on the relative strength index, which is faltering away. And you can see here that essentially RSI is now between 40 and 60. And again, that is very much ranging conditions. So you can see that on the daily chart. Drilling into the 4-hour chart, you can also see a range building on the 4-hour as well, between the 83 mark and up towards the 84.50 area. Little bit of a pickup, dead flat on that 55 period moving average on the 4-hour chart. So this is very much a ranging play, and I think again it really does show that broader markets, I think, are going to slip into more of a trading range in the coming days and weeks. And finally, onto the FTSE 100 chart, the breakout previously, which we saw above this 68.15, 68.20 area, was a key move. However, we saw the resistance on the long-term resistance. If I actually zoom quite a long way out, you can see that long-term resistance around that 7,000 mark. And you can see that the market is now threatening to form a top pattern. A small head and shoulders top pattern is threatening. That top pattern would complete below that 68.40 mark. That is the key level of support that you need to watch out for there. But these momentum indicators are starting to look very much more of a range play, if not turning into a topping pattern. So that is the risk there. Below 69.40, you're looking at the 67 area, 6,700 area as a sort of a retreat zone, and that could be possible in the coming days and weeks. But that is the risk, I think, there. In terms of resistance, zoom back in, you've got that resistance of 69.40 area. that is the level that you need to break out to the upside to really start to target 69.60 and then 7,000 again. But looking ranging now on FTSE 100. Thanks for watching this video. I hope you found it informative for your trading. Join me again on Monday, where markets will certainly be starting to look towards the Federal Reserve meeting next week and a lot of key data. So join me then. So with that, I will leave you with the INFINOX support and resistance table, and I'll speak to you next week. Thank you very much.